Welcome to the tutorial on computation of income from business or profession. If you have a numerical problem which asks you to compute the taxable profit or losses from business or profession, the first item that you would require is from the profit and loss account, the net profit. After you have written down the net profit from the question, to this you would have to add or subtract 5 different sections, and these are the 5 sections that we will discuss right now. The first section that you would add to the net profit are disallowed expenses. Now these expenses you would find in the question in the profit and loss account. These are debited to the profit and loss account, but they are not allowed, and that is why we're going to add to the net profits. There are 15 items under them. The first is all provision and reserves, all taxes, all capital expenses, all capital losses, all charity and donations, all expenses relating to other heads of income, all personal expenses, any depreciation if wrongly debited, gifts and presents, any type of fine or penalty, losses from earlier years, any other expenditure which is not incurred according to the provisions of law or which is beyond the permissible limits, expenses expressly disallowed, expenses not allowed under section 43B, and difference in trial balance. So these are the items in the first section that you would find in the question in the profit and loss account. The next section is amount not credited though taxable under this head. So in the question you would find this as additional notes. There are 3 items that are comprising in this section that you would add to the net profit. The first is deemed profit under section 41, other chargeable profits, cash credits, and unexplained investments. The next item are expenses that are allowed but not debited to profit and loss account. And here we find there are 9 items. The first is allowed depreciation, investment deposit under section 32AB, development allowance, capital expenditure on scientific research, capital expenditure in family planning to the extent 1/5 only for company assessees, expense of earlier years but disallowed then because of non-payment, actual bad debts that are not charged to profit and loss account, difference due to under debiting of stock or any other expenditure incurred according to the provisions of the law. The fourth section that you would have to deduct from the net profit are income that are not taxable under this particular head. There are 10 items. First is interest on securities, rental income, dividends, bank interest, and winning from lotteries, capital gains, refund of income tax, bad debts that are recovered but disallowed earlier, agricultural receipts, life insurance maturity amount, withdrawal from provident fund, and gifts from relatives. These are the 10 items that you would have to deduct from the net profit. The last item is, and you could see I put a summary here, the 4 items that we have discussed, and the last or the 5th item is any income from any other business, whether legal or illegal. So here we have first you would have to write down the net profit that you find in the profit and loss account, and then add and subtract the following items that we have discussed, and then we would receive or deduce the taxable profit from business or profession.